Hello everyone, it's Blake with Boost Portfolio recording on July 28th, 2017. If you like this video, make sure you click the subscribe button in the lower right of your screen. Just keeps you up to date with all of our latest content. Also, make sure you guys check out our website at boostportfolio.com. We're giving away 2-week free trial memberships. Come check us out. In this video, I'll review the major markets and also recap today's trading action. So let's go ahead and start with the SPY. Now, in this video, I really want to recap and give you my opinion on what's really happening in the stock market. I know we're at all-time highs. Prices seem inflated. Just seems about every other week there's somebody calling for a correction, especially in the tech sector. But what's really happening? You know, how can we take the emotion out of this? Now, I have the SPY pulled up on a monthly time frame. And we have the 2008 crash back here, or I'm sorry, the 2000 dot-com bubble, and then we have the 2008 housing crisis. And then you can see today, we are just grinding higher and continuing to make new highs. Now, when we had the dot-com burst back in the early 2000s, you can see the slopes of the moving 10 and 20 moving MAs. They had a crossover right here and kind of gave you an early signal to say, hey, things aren't looking right. And we also had the MACD, which was also crossing over and actually had a crossover way before the crash. So that was an early indicator to say, hey, things are getting a little rough. Might be time to take some chips off the table. And then same thing, what happened again in 2008? Same thing, once again, we had a MACD cross bearish right near the top, and the 10 and 20 MAs started to slope over and roll over. Kind of give you an early warning signal, especially on this monthly candle, to say, hey, things aren't looking too great. It might be time to take some chips off the table. Now, if we compare these two tops to today doesn't look anything even close to what these two tops looked like. Now, I'm not saying that can't change, and eventually it will. We won't go up forever. But at this point, you can see we've kind of had this nice rally all the way back from, you know, early 2010, and back in 2015, early 2016, we had these two really big V-shaped rallies that kind of put in a lot of volume came in here and kind of put in a short-term bottom. So if anything, rather than a top, this looks like an intermediate to short-term bottom for all the investors out there. You can also see we had this MACD cross bullish, you know, just most recently back in August of 2016. So the signs are bullish. I am definitely not bearish at this point. And you can also see the slope of the 10 and the 20 MA are rising at a very nice angular slope. And we're continuing to hold this trend line. So until that changes, I won't be really bearish at all on the current environment in the stock market. Yeah, sure, we're going to see some volatility like we did on Thursday, but I mean, that's literally nothing, no harm done to, you know, a higher time frame and a longer term investor. We're still trading in this upward channel. The slope of the 10 and 20 MA are moving higher, and the MACD still is moving higher. So at this point, I would say we're far from, putting in a top. If anything, seems like we have some short-term bottom that happened right around, you know, early 2016, and from there we've kind of rallied from there. Now we've had a great run-up in especially technology. But technology, in my opinion, is where the disruption is. With advancements in machine learning and artificial intelligence, I think that, yes, the valuations are high, but there's a reason that they're high. And price, in my opinion, is always right. It's the only thing that you can trust. And so at this point, I'm very bullish on the stock market. Now, that's a long-term investment approach. Let's take a look at, a weekly chart, which is a little more tactical. If you're more of a swing trader, position trader, a weekly chart might be something that you want to take a look at. Now, recently, we do have some negative divergence with MACD and SPY, and all that really means is that price is making new highs, but the momentum is kind of slowing down and grinding lower. Now, you can see we put this high back in on the MACD in March. Right around price was 240. And now we're right around 245, 246, 247 area, and the MACD is kind of just flat. So keep an eye on this MACD. If this MACD can cross higher, meaning the blue line moves higher and moves above the orange line, then it would be very likely that this would continue its run higher. This week's candle, we are printing a doji candle. Just means, it didn't really move anywhere. We opened, moved higher, moved lower, but we're closing just pretty much where we opened. So that's a doji candle. It indicates indecision in the market, which makes sense. We're at all-time highs, but as long as all of these index funds and passive investors continue to feed the stock market, my thesis is sideways to up rather than down. So keep an eye on the weekly time frame. Now, in order for that weekly time frame to move higher and not lower, the daily chart will have to come into play and help that out. So yesterday on Thursday, we had quite a bit of volatility. Really no real reason, but we did hold the 10-day moving average and had a nice hammer off of it. Today we opened lower, came down a little bit, but we're still inside Thursday's trading range. You can see not much of a range today, but we're just hanging out right at this 10-day moving average, right around the 246.70 area. So keep an eye on that 10-day moving average. If we break below Thursday's low, then I think it's possible that we come and check this 20 MA. Now, if that happens, this MACD will probably cross lower and the momentum will start to favor the bears in that case. And that weekly time frame will start to come into play a little bit more. So currently, I think that's really all I need to sum up with the overall market environment. I think longer term, it's very bullish, but in the short to immediate term, maybe sideways, maybe down if this MACD decides it wants to cross lower. But overall, I'm still very bullish on the general stock market. Now, just a couple sectors, guys. I think it's important that we look at oil. If USO can start to catch a little bit more of a bid, then I think that it could potentially fuel the stock market higher. I think 245 and higher is very likely for the SPY. Now, really, the trend line that I'm looking at is this longer-term downtrend line. If we can break above this, then I think the move could be extended and we continue to move higher. In last week's video, we had a nice breakout on USO. I mentioned we could get a nice little pop to 10 and a quarter, and we're right there right now. So maybe a smart idea if you took that trade to take some risk off. We are approaching that downtrend line, so that downtrend line is really the key one to watch. So keep an eye on USO. That being said, I do think if USO does catch a bid, I think oil is right around $50 right now, but that's kind of been an area of interest. We can get above that $50 mark. I think we will take the stock market higher. Biotechs, you guys know I like biotechs. Once again, let's look at the bigger time frame. Let's do something similar we did with the SPY. The biotech sector I absolutely love for an investment longer term. If you guys take a look at this chart, I think it pretty much speaks for itself. We had a very, very, very nice run up all the way until pretty much 2015, sold off, and then we've kind of held this area for almost 2 years. Now, most recently, we have had a MACD bullish crossover back in, let's see, that was March of this year. And we also broke out recently, just a couple weeks ago, of this ascending triangle, which is a bullish pattern. So looking on the monthly time frame as an investment, I do love this. The 10 MA is also crossing through the 20 MA, which is also a bullish sign. Momentum is favoring the bulls, and I think it's likely that even within this year, we could come back and test this 400 mark. I don't think that's out of the question by any means. So monthly time frame as an investment, I love the biotechs. I know there's a lot of healthcare stuff and votes going on in the political field, but I don't think it's really going to have too much of an impact. And I think this stock market really knows the direction it wants to go, and it's going to go there regardless. Now, on the weekly time frame, also, it's looking good. It's holding strong. We had this breakout about 5 weeks ago with some volume, so that's a positive sign. And then we're just kind of holding that. You can see we're holding that high from that breakout level. That's on a weekly time frame. Still bullish on a weekly time frame. Now let's take it into a little bit shorter time frame on the daily time frame. The thing that I'm watching on this daily time frame are two things really. This MACD, if this MACD wants to slope lower, I'd be a little bit more cautious with my trade with Gilead, but that's an investment, so I'm not too worried about a daily time frame with that. Now, this 20 MA has really been holding since the middle of this year, June of this year. And so we've held this 20 MA for quite some time, and it looks like we came back, test the 20 MA again. As long as this 20 MA holds, guys, I'm going to remain bullish on the biotech sector. And where it looks like we want to close above the 10 MA, we got about 25 minutes till the market closes. So I do like the IBB. As you guys know, I am invested in Gilead, one of my favorite stock setups, and I'll show you why here in a minute. Last one that we're going to scroll out and look at a few different time frames. But the reason that I like Gilead is because we have this falling wedge pattern on a monthly time frame. The MACD is getting ready to cross up, and we're closing out of this wedge for the first time in since the middle of 2015. So a big trading range. You know, we've been in this wedge, and then we're finally breaking out of it. So I do like Gilead. They just reported earnings; they were positive. So I think obviously, if the IBB and the biotech goes higher, I think Gilead will be one of those stocks that leads it higher. So that's the investment side of Gilead. Now on the daily time frame, we got in on this day right here, right as we printed this hammer off of this downtrend line, and both of these sloping moving averages were moving higher. Ever since we've got in, it's been a very easy trade to stay in. We're still making new highs since we've entered here, so I'm still long Gilead. I do like it. I do think this 85 level could be the first potential target. We do have a gap fill up here right around the 95 area. So if we really get some legs in the biotechs, I don't think this gap fill area is out of the question. So keep an eye on that. Finally, let's look at the bonds, guys. We'll wrap up. This is getting a little long. So the TLT, the bonds, you know, we're still in this kind of range right here. We're holding this previous breakout line. As you guys can see, Thursday we kind of had a doji off of it. Today we're holding it. The MACD is flat. Really no trade in my opinion right here. I think the trade that you do take, if you want to take a trade on the TLT, on the bonds, as you can see, both of the moving averages are sloping downward. This line right here has been, you know, pretty much a line in the sand. And if we can break below this low, which was, you know, 22.59, call it, I think, you know, we do have some more downside in store. On the upside, if we can get back above this trend line, then I think that might be your entry to take this long. So basically just playing this break below and this break above this trend line. So that's pretty much all I have for you guys this week. Make sure you come check us out, boostportfolio.com. We're tailored to both the trader and the individual investor. We have a unique service. We think we offer incredible value at an attractive price. Boostportfolio.com. Thanks, guys. See you next week.